Shazam. Whoa. Who's that? Below me, I think. Hello, Ty. How's it going, man?
Hello. Welcome, everyone, to tonight's Wednesday webinar. Yes, as you can see, we have got both cameras on, so look out. We're just pushing technology to the limit now, getting cameras out. We've got microphones in front of us. We've got headphones on. We're ready for action. So let's jump in. We've got a lot to cover tonight, and we've got very limited time to do it. So let's jump in.
That's right. A lot to cover, Ty. So we'll start off here and welcome everyone to the stream. Obviously, quick risk warning. This is a webinar for educational purposes. And as you can see in the link down below and everything, this is not to be considered financial advice. As always, please make your own decisions. And if needed, consult your financial planner or advisor. Okay, so let's have a look here with gold, Ty, because I think this is something that we put into the Discord community today. Well, at least I posted it through, and I think that it's a good lesson of maybe being a bit patient, and it's also a lesson of waiting for confirmation. So gold's been on a bit of a tear. We've seen it here break up and move through the 1795, breach past, get a nice closure, and actually give us what we like to see, which is a pullback to our red box zone that we put in, and more importantly, a nice little trough peak, high trough, higher peak scenario with the pullback here. And it's actually fired pretty well. Can't say I'm upset with this one. I mean, where is it? It's gone 1797 up to 1806, which is decent already for gold. And when you think about it, where does your stop loss have to be here, Ty, if we enter off this position? So let's say we enter here. We have a couple of choices. One is down here and the other one just over there, eh?
That's right. Being gold, I would probably go the second option just because I know that it can be a little bit whipsawy even at a point of support. I would go the second option because the main reason for that is because I think the take profit's so high. Yeah. I think you've got really good risk reward on this trade, even if you're entering from that point. So you can afford to have just that little bit more on your stop loss. But if you wanted to be ultra aggressive, you wouldn't be, beaten over the head with a bat if you put your stop loss at the first one. It's just knowing your instrument. It's one of those things. If you know your instrument, I'd go get the second.
I mean, look, if you're feeling a little bit frisky and you want to get involved in some gold with some high risk reward kind of ratios, there's definitely high risk because, as Tyrone said, gold can pummel you within seconds on your stop losses, and I think that's what you need to recognize. If you take the higher risk stop loss and it comes in and it fails for you, you can't go and cry about it. Because unfortunately, you have taken the lower statistical of success, but of course the higher reward when it pays off, and that's what happens. That's how it is.
If that was a Euro USD, yeah, know your instrument, understand the instrument you're trading, and just do it accordingly, right? If that was a Euro USD, which is like a grandpa snoring, there. But if it's gold or if it's something a little bit more exotic, like some of the cross pairs, give it a little bit more room, because there's nothing worse than getting the direction right, having your stop loss too close, seeing it get hit, and then off it goes in the direction that you thought it was going to go, and then you'll revenge trade and it turns into a circus.
Yeah, and you don't want to be doing any of those things. I hate revenge trading. That's bad. So let's talk about the important levels moving forward here for gold, Ty. So of course we have, firstly, everyone in the community, please be aware. Let me just quickly click over here. You need to know FOMC meeting minutes. Now, I wish it didn't matter. But unfortunately, at the moment, the FOMC, it seems to matter a little bit. And the Fed is important. There's talking about tapering. This is now a thing we must pay attention to. If you are aware and you're willing to take the risk, what did you say, Ty? If you can't go to sleep and sleep soundly at night with your trade open during Papa Powell's discussions, or at least during the FOMC, then you're probably either risking too much or you maybe need to wait for the confirmation. Well, it's just the truth. I know the feeling. You know the feeling. Have you ever had a sleepless night? I remember one time we had this person come in. He had red eyes, and I was like, "You never slept, yeah?" He's like, "No."
There's more than one, but there's one in particular that we're talking about. And look, you know what? And look, Thomas and I have had those many, many years ago. I haven't had a sleepless night from trading in many, many years, and that I promise you, because you don't want to be in that place. You do not want to be in that place ever. Okay, and if you are, you've got to change your risk parameters. you've got to change the way you're going about it, because it's the one-way ticket to failure.
Yep,
Absolutely.
It really is. So we've got some opportunities here. Well, firstly, there was an opportunity in the room today. I hope it does continue on. I mean, it's already done a nice kind of 2-to-1 or at least 1-to-1 kind of ratio trade within the day trade. The next opportunity is, of course, the risk gets up here at the 813, 814. So we close above the 814. I believe, Ty, that this brings in the possibility of an 1845 trade here. And further participation phase for gold. Now, by the time it gets through this level, the FOMC meeting minutes will have already gone through. So if this is to occur, it's probably going to go breach, pullback, movement. Is that going to be a safer trade? What do you think?
100%. That's what I'd be waiting for. I wouldn't be even dreaming about taking it now. If you didn't get that initial entry, which you probably, in fairness, I'd be almost breaking even if you were already.
I would too.
Yeah. I would be too before the meeting minutes. Absolutely. Get that out of the way, break it even, so you can't lose on that trade, or even take some profit, and break the other part even. But the next trade is the retest of that 200. There's no worries about that. It needs to break that high, needs to come back and test it from above, and you know where it's going after that. It's going to 1845. So there's plenty of room.
Another one that's even more crazy is, of course, silver. Now, the thing with silver is that it usually trades with gold to a degree, but it's also very, I call it like the psycho one, or the hyperactive one, because when silver runs, it runs as a higher percentage. When silver, of course, tanks, it tanks as a higher percentage. So it's really important to understand that what you're trading. And I don't know, a lot of people were talking about this level here. I don't know if I like the silver chart as much as I like the gold chart right now, but I totally understand that there's great market structure across this board. Both look like they're recovering, and at this stage, I'm waiting for gold to show us more, and then we'll come back over to the silver chart later on in the week, and we'll skip through that one, I think, Ty, for now. Now, we have some interesting currency stuff, so let's just quickly talk about a few things that we're seeing in the currency world, and then we'll go over our indices, and we'll go over some stocks and other things that we have in the community. So firstly, I want to talk about this euro US dollar. So again, FOMC minutes, this is going to affect the dollar index. Actually, we'll go dollar index first. Weekly 50 is everything here. And if you're not looking at this zone, Ty, weekly 50, closure above, big deal. At least 93.40 after that, yeah?
Definitely. I can't see it not getting there if we get a close above there.
Yeah. So closure here, movement up, 93.40. And then after that point, well, I mean, if you're doing that, then you've created a gigantic double bottom. Oh, gigantic.
Huge. Yeah. And look, what you want to be doing too, when we say 93.40, I wouldn't be specifically targeting. I'd be going just a couple of points below that, right? Like, previously it touched it and only just. I would be, if I was actually trading the dollar index per se, I'd be aiming probably for 35. So, maybe 35 to 38. So don't 20? Go for the exact zone. Absolutely. The 20 will be there too by then.
Monthly 20.
Because the next candle, unless it explodes on this candle, which I don't think it will. Well, it might. Is that a monthly? What chart are we on?
This is a monthly, yeah. If this happens and it breaches here, my goodness.
Yeah, it'll be there. Yeah. Oh, yeah. If it gets past there, that double bottom is going to be epic.
And you know what? We need to know this as traders. We need to know this as swing-based. Anyone that's trading dollar index, anyone's trading currency, if you're not paying attention to this chart and you don't know what happens after this, this is monumental for dollar strength. And we're starting to see some signs also warming up here in the bond market that are changing the game. And maybe we'll talk about that a little bit later, because I want to go through, of course, all the potential setups and concepts that we're talking about right now. So let's move over to Euro, Ty, after looking at dollar index. And maybe it's too early to really get too excited about this due to the FOMC. But if we have a look here at the Euro and we think about what it's doing down here on the low, it's got the little long leg doji on the 4-hour, Ty. Look at it. Little indecision over here. What are our thoughts about a potential breakout low?
Look out if it breaks that low. If it gets down there, wow, it's going to go to exactly where we thought it was going to go, and we've been talking about that level for a while. So, and that would coincide with a 93.40 US dollar index.
Yep.
So you're going to see this go down to the low 117s. I don't think it can't happen.
What's that kind of look like? Looks like
Well,
a little dirty flaggy kind of thing.
Yeah,
Here,
absolutely.
It?
It looks like a flag. It's a flag it's one of those flags that you got to be a little bit careful of, though, all right? Because it's a flag at a level of support. If that level of support gets broken and the flag gets broken, then it's double reason to be taking this trade, because you've got a level of support that's also been broken. But just be a little bit careful on the first break of that flag. Just be mindful that there is support there. But that's going to go straight to the 117.20. We know that. Bang.
Yeah.
And you've only got, when a pattern overlays the next support and resistance zone, we know that it adds an extraordinary amount of power to it. So I think it's really, really important to draw these. Even if you don't understand where that support or resistance is, measure the distance, put it underneath to take profit, and then go out a couple of time frames and see if it actually lines up with another level. If it does, it really adds a lot of power to that pattern, because it's almost like a magnet, right? The magnet's going to draw it to that. Then the power of the pattern will push it there, and it gives you a lot more opportunity to actually, it gives you far more power in that trade. The momentum will increase significantly because it's got a magnet drawing it as well.
So we should find out probably over the next 24 hours whether this thing is going to start firing. And I think it's across the board. I actually was looking at the pound just in the last webinar, Ty, and I was talking. I hadn't really been looking at this one that much, but what was I? Was I looking at this? I think I was looking at this and then going through these lows. So yeah, that's the one I had. So I was looking at that and I was just thinking, it's kind of similar to the euro. If I drew it properly, you'd probably get into it. But the euro yen that we've been looking at from the short perspective, this is also a bit sick. I just don't see trades here though compared to the euro US dollar. I mean, I look at this and I'm like, how do I do that? What can we do? Can we do anything?
The opportunity doesn't look as nice here. I think it's not to say it's not going to do something, but I don't see what it's going to do. That's the problem. Like, it's not immediately obvious what's going to happen here, long or short, right? Like, I don't even know.
No.
I look at that and I see, even though it's not messy, even though it doesn't look like it's all over the place, it still looks hard to trade for me. I don't know. I'm not there yet. When you go out, you'll see that it is a bit messy. But even on the smaller time frames, it's not ridiculously messy, but nowhere near as clear cut as the Euro USD or even the Aussie for that matter.
That's right.
And I've got a question from Dutch there saying that, would we short the Aussie USD now and look at 73.35 for the next level if the DAX shows more strength? Look, I always like to trade the trade for what it is. Dollar index is a massive bonus. Make no mistake. So if the Aussie is, looking short on in its own right, which it kind of is, especially if it breaks lower, it's a trade in its own right. All the dollar index is doing is actually helping it get there. But I wouldn't trade it just because of the dollar index strength, especially the Aussie. It's nowhere near as reliant on the dollar index as the Euro USD is.
I think we also
have an advantage.
And we are in a struggle point. We know we close under here from the weekly. Where are we starting? We're going down to the 73.80 area. We go to the daily. Again, it's going to be probably known in the next day which way this market wants to go. I'd probably look. Does that look bearish? Absolutely. But did it get any follow through today? No. That's a big, dirty rejection candle with no follow through coming into, of course, the FOMC minutes. So I think that's the big issue here with a lot of the currencies, and it's probably why we're going to skip over into a few other things. But US dollar yen, another one, Ty. You love this. I think you love the US dollar yen, or maybe I know you love the US dollar CAD, but the US dollar yen on the daily 20. What are your thoughts about it here? Because I don't think it's too bad.
It's good. I think this is a better trade than the US dollar CAD at the moment, because this has been the consistent one right through, and it's holding its levels really well. The technicals are standing up really well. The CAD's already done its thing. Yeah. And all of you, Dave, you're in there as well. You know what's going on here. I look at the US dollar CAD and I'm wearing the US dollar CAD, patch on my jumper. I'm very happy with it. I'm pretty happy with what it's done. But now I think it's in a place where it's going to be a little bit more difficult to trade. I think it's still got more strength in it, but it's not as clear cut as this one. I think this one's technicals are holding up far better. And from a scalping and swing trading point of view, the US dollar yen is where the technicals are at the moment. And this is no exception. This is what we want to see, the lightning bolt continue. But this has proven time and time again that right now, in July 2021, it's actually been really May, June and July. The US dollar yen has been the one that's been most consistent for the majority of the entry points, really. It's been great.
Yeah, and I think this little tester that's coming in here on the 4-hour 2050, you can see why resistance is coming through. If this does this and then all of a sudden breaches below, there's going to be a short for you as well, because you're going to have a head and shoulders here. So you're going to have left shoulder, head, right shoulder, cross, big support through the 110, and this has been an aggressive trend. And remember, we had this line drawn up here for a reason. We believed that was the point where it was potentially going to run out of steam. So there's two ways to look at the US dollar yen. A lot of it's got to do with the minutes, and we'll be updating you in the Discord community and obviously in our webinars moving forward, and our live streams on YouTube as much as we can about this, because things are about to change. Things are definitely on fire, probably within the next 24 hours. So a lot of stuff breaking down here. Now we've got some interest tie in a few indices. So let's just quickly go over a few people mentioning, hey, the US 100 is firing hard. Yes, 0.68%. So this really continues into our trend of we're looking for one thing and one thing only, and that is our giant community trend line. Now we know it's the community.
Can you label that? Can you actually label that trend line the community trend line? So we know exactly what we...
I could label the community trend line, but the realistic thing here is that we have a very... I don't know why there's so many... What are these stupid horizontal lines doing here on the NDX? So use the NDX or QQQ if you're wanting to do your analysis on this. So we know where our pullback dip buying is going to potentially be later on this year, but do we know where the bulls and the bears potentially end the fight? And I'm starting to think, it's probably going to be somewhere up here. So this is the top end range for the NDX. Now you think about how long this is away, it's really only 2.6% if it goes in the current trajectory. So we're up 0.66%. Remember, this market's not currently open. We are getting so close to something I think pretty serious. And I don't see, especially the SPX tie, getting through this community trend line easily. No. This has been way too good. And it just makes way too much sense for Wall Street to smash leverage people if this does happen over the next couple of weeks.
It's just not going to. It's just not going to get past there on the first hit, because it just simply can't. The market's not that good. They're just not that good. I mean, they've already had record runs. It's already at record prices. If it gets there, it's just going to be a sell fest. Be self-fest by the institutions, and it'll be the retail traders that suffer, because they'll jump in. They won't see this community trend line. They don't follow this channel. They don't know, and they think it's gone to 17,000.
Yeah, they're just thinking. They're thinking these things are just going to go on and on and on, and they're not going to get pullbacks. Well,
that's not the way the market works. The market can't work like that. It's not something that can go up in a vertical line and not come down. That's just not how the market works. So, and I think, to our benefit, we've got these really key zones that we know are going to be very, very heavy resistance for them, and I think they'll gravitate there. The CN50, who requested that? Ray?
It's always the same person.
Ray.
It's always Ray. Look, CN50 does hit the major support. This is the level that even when I remember when Ray was talking about it here, buying it up. You're in the middle of the zone. Now you hit the bottom of the zone. Good news is you got an engulf off it, which is, is it open or is it's going to close soon? I can't remember. But yeah, this is the futures. I think it did get an engulf off it, or at least it's looking good. Another thing is the Shanghai comp, which obviously a lot of people are concerned about right now. This is the Chinese Shanghai market. This is starting to fire as well. This is a good level of role reversal here, Ty. And I think we've spoken about this at great length. 36.50 is the real deal here. And it all comes down to the weekly. I mean, you look at this weekly, you think about the participation phase that could ensue, and we already know the government's bailing companies left, right, and center, which means magical stimulus. And when we have magical stimulus, Ty, we create the rocket ship, yeah? So the Chinese market, it can move completely opposite to the US. In fact, even during the pandemic, we saw this market, relatively speaking, hold very firm. Look at the run. It barely even got dumped, and then it came back with a vengeance, and it looked like it was the greatest investment ever. And then, of course, the US market totally took it over. But
I think they love it. I think the Chinese market loves to go against the US. When the US is falling, I think the Chinese market does it on purpose. To rub salt into the wounds.
Exactly. So a lot of stuff.
They don't rely on each other. I tell you what, they don't.
No, they don't. No, they're
absolutely
different.
don't.
Yeah. Musti said, I made 10% off CN50 last night. Got a couple of bucks. Maybe went out too quick. Yeah, what time frame are you on there, Musti? That you must have been on a really short time frame. you gotta look at it. This brings me to a point, Ty. We have to do this, and this is for the benefit of a few people in the Discord community. We'll do Qualcomm. We have to do Qualcomm here, or QCOM, or whatever the hell it's called. And this is someone that I don't really want to point at them or anything, because this happens to everybody. But basically, they've gotten into the position. It's based on, of course, a larger daily closure above, which we haven't seen. You could negate this candle because it instantly moved down, and basically it was just a false break. But we've got this nice spring happening over here. We have a breach. We know that we have potential target over here on this stock. And Tyron and I both, I'm probably putting words in your mouth. Do you like this type of this pattern right now, Ty?
Oh yeah. There's a lot to like about it.
I'll just quickly show you what this person did. So we'll go here the daily, and then I just want to scroll down into the 1 hour. And unfortunately, they've looked too deep, and they've seen this, and they've gone double top closure. I'm getting out. I will just reiterate this: the market, especially the short side, gives a ton of false breaks. Tons. Mm-hmm. It's not nice to the bears. If I'm going to go bearish, or Tyrone's going to go bearish, I would say we could only use the weekly daily. And I'm just going to put that blanketly out there. Unless you're scalping and you know that you're going to be wrong a relatively high period of time. Now, if you trade in the index, it might not give you as much false. But particular stocks give you a ton of false. What are your thoughts, Ty?
Yeah, no, most definitely. You've got to look at the bigger picture. And I think that it's a perfect case of, look at the bigger time frames to understand the level that you're trading.
Daily close.
It's really, really important to actually look at those bigger time frames. It makes all the difference, and it's hard to do, I know. Mm-hmm. Look, we've been there. We've been there. We know how hard it is to, be looking at a daily or a weekly chart when you're trading the 1 hour. You're like, what are these idiots on about? But yeah, it gives you the bigger picture. You're never going to get any harm by doing it. I think that's probably the way you have to look at it. There's never going to be any harm by looking at the bigger time frame, but by golly, there could be some harm by not looking at it.
Mm-hmm. Yeah, and I think with this one, you want to look at daily close. Where are you going to be concerned? Let's think about it here. You've got a massive plan. Let's say a massive plan. Even if your plan's 150, okay, you have a breakout. You have a pullback to the zone, and you have no daily closure underneath this. Now, would I be concerned even if it got to 137.50? I actually think that this is the point where you start to go, well, I'm a bit worried. Where a lot of people are going to have their stoppers down here because they've got a big plan. Their plan is to take massive. And if their plans take massive, they're giving it a lot of room. But you have a 200 daily simple moving average, a 20 exponential, previous resistance becoming support. This is a very tough level for QCOM to bust through without the rest of the market really collapsing at the same time. So I think this is probably where you start to get scared, and everything above there is just, normal market action.
Yeah, 100%. Setting up to be a good trade.
I hope so.
Yeah.
I hope the semiconductors come through for a lot of people. Unfortunately, the big issue at the moment for a lot of people, I think, has been these Chinese stocks. And unfortunately, if you look at any of them, you look at the Baidu, you look at the Baba, it's not that the technical analysis was bad, okay, guys? I really want to reiterate that. If I was seeing these types of patterns and I had a series of lower highs coming through, we breached that zone, you see this kind of action, I would have even wished a little bit more bullishness, but there's nothing wrong with a lot of these setups, especially things like Baba. It's just you got smashed by the government intervention. What can
you're not going to get put in front of the firing squad for taking that trade. Like, that's just one of those things. Like, sometimes it's just not going to work out. Like, that's just sometimes it's just not going to work out, especially when there's intervention. Yeah,
that was brutal. It was brutal intervention. Now, I think that, again, where should you really have your stops? I mean, I think at least you should be giving this the room to breathe. I mean, if you're getting in here and you're not giving it room to breathe to at least down below here, you're not really swing trading it. You're probably scalping or day trading it. And if you're doing that, then you need to understand that you can't just buy the falling ship like this. You've got to wait for the lightning bolt. Tyrone, the lightning bolt, the lightning bolt, the lightning bolt right here. If you're not waiting for that, you're killing yourself.
You must be waiting for the lightning bolt. When in doubt, wait for the lightning bolt, and that goes for any share, any trade that you're actually putting on. There's no question about that. David Wallace asked a question about moving averages. For those of you who don't know, we don't actually change our moving averages. The EMA 20 and the 50 and the 200 SMA is what we use, and they are on every single time frame that we use. So it doesn't matter whether it's a weekly, daily, or a 5-minute chart. Exactly. We've always got the same moving averages on, and they self-adjust. So as you go through the time frames, there's never any adjustment. Okay.
And you know what? For Barber Ty, it is put up or shut up right now, because for this stock, if it doesn't come good right now, and on this effectively incredible trend line that it's coming back and retesting on the physical support of a pretty nice 210 number, and you can see it's up in the pre-market, it's got to do it. This is where it has to do it. If it doesn't, and it breaches underneath here, I mean, that's just one. You got to notch it up and say, okay, move on to the next one. Never put too much risk on one trade trying to make the $1 million in one area. Proper risk management, everyone, if we can.
Go for $500,000. That's plenty. Just do it twice.
Go for a little bit less. Someone thinks I'm hard into the Shanghai market. No, I can tell you I'm not. But I know that people are stressed about this, and because so much is going right. Shopify, TDoc, Square. I don't know what you want to throw on the market. Like, so many hyper stocks have moved heavily. Everyone started getting into these Chinese stocks. We saw that rotation start to occur, and then one piece of news ruined that trade. It happens, and it sucks, but it is what it is. Let's continue here, Ty. I want to talk about Amazon quickly. This thing
and we've got to look at the DAX tonight. Nick's asked for the DAX, and he said, please, for goodness sakes. That's so polite. So we're definitely going to look at the DAX for you, Nick.
All right, we'll look at the German 30. All right, well, we'll look at the DAX. Here's the massive breach yesterday, and actually all the FANG stocks fired hard. This is a really interesting but tough kind of position to get into. And look, I always go with, you have the long leg doji, and you have what you want to check is probably the weekly close. You have a weekly closure at an all-time closure high, and then it fires in the morning, and boom, it goes. Now, this has been pent up since July. So, every single analyst out there pretty much has, a 3,800 target on it, a 4,000 target, I think, Ty, for Amazon. They're all floating around here. And this is the type of thing where I look at Amazon and I think, breakouts occurring. And I go over to other stocks like Apple, and we mentioned this, this one, Ty, this sending another all-time high weekly closure followed by some nice flow on. What are your thoughts here about, does this keep going?
Well, you know what? I saw their new IMAX and all of the colors that they come in. And I can't see how it can't get to 160, 170.
What, you think colored IMAX are getting in there? They did them in the 90s.
No, I know. They used to do the colors and they've gone back. Now, I think, look, it's a very serious break, this. And realistically, Apple is a little bit, it can be independent of, a pandemic. It can be independent of a lot of different things. That's why I really like Apple, and probably Amazon for the same reason, really, that they actually benefit from this sort of stuff. Like, they benefit because people have got more money to spend. They're going to spend it anyway. So the only thing that would be able to, hurt a company like Apple and Amazon and some of these big retail stocks is a depression. And we're not in a depression. The government's made sure of that. So it's when spending gets tight that these are going to be affected. And that doesn't look likely anytime soon. And more importantly, that can't happen overnight either. So there's really no reason not to be really bullish on these, even though the market's at ridiculous all-time highs. There's nothing really to say that these can't reach what the analysts seem to think they can. And you let price action and the market dictate, and that's a really important break.
Yeah, this is an important break.
It's an ascending triangle.
Exactly, and I think this is actually going to be short. So what I reckon is going to happen is this will fire, and it seems to be already pre-market, another 0.84% here in the market open. And if it does continue to fire through, it's going to put on that 4, 5, $10, and then that Nasdaq tie is going to hit our top trend line. It's going to drag everything with it, because remember, Apple is a huge part of the Nasdaq, a huge part of the SP500. These big FANG stocks are what's firing. They're going to fire hopefully into those resistances, and then it's all going to flick. And I think a big thing that we're going to have to watch here is PCC, like put call ratios. We saw a huge amount of puts getting opened yesterday. Well, that's a bit of a trap, of course. If there are a lot of puts being opened, that means the nice expiring of those weekly options. What do we know retail traders like to do in America, Ty? They love the weekly options and they slam them. So this is the exact, what we want to see is it come back down, hover around under that 0.7, and then at the same time, we're under 0.7 as we hit our community trend lines, as we hit everything, and it's all going to start to paint the picture that we want to see. So, look, these big FANG stocks, especially things like Apple and Amazon, they really are firing, and that's probably going to be where a lot of the interest is through the next couple of sessions. Now, what other stocks did we have that we were looking at, or other positions? I want to show you IONS. Oh, not on that. So I actually know nothing about this company. However, I was looking at it from a technical perspective. Now, I do know there's a few things I was interested in here. Why is it that we're seeing, we've seen a decent amount of volume increase recently, okay? So you can see that volume increase. And I wanted to bring this in because I think it's an interesting case of, maybe there's some good TA here. What do you think about the accumulation down the bottom here, Ty?
Yeah, I think it gels well with what's actually happened. I think that you've got to look at it from. I've never even looked at this chart, obviously. So and it's going to be.
No, this is just from a pure. This is a pure chart analysis and a TA. Yeah.
So I think that when you strip everything back, I think that's what it comes down to in the end. As traders, we need to do that. Mm-hmm. And you've got to say you've got a lot of things in your favor, right? Like you got a big lightning bolt on a daily chart. No question about that. Testing a resistance level from above that's been broken already. The 20 is trying very, very hard to break above the 50, which it will do. Nothing short of a market collapse will stop it from doing it now because there's too much momentum. It takes a lot of daily candles to close low to make that reverse. You had the volume spike in the places you needed it to off that 34 sort of 70 area. But yeah, it's good. I mean, the only thing that concerns me a little bit, it's got a little bit of trouble in front of it, like right in front of it. But I would be probably waiting for the next swing. But if the next swing gets past there,
so you're saying enter on the participation phase that gets past this area. So let's say this right now, this is up 1.2% in the pre-market. So it's going to be opening right around resistance. Is that right? No, 40. So 42.7. So let's scroll this in 2-hour chart because there's no doubt that's amazing accumulation. It's done all the right things, and it's even found a little bit of resistance breakout. And Tyrone's correct. This is the zone that we're going to start having problems with. But we breach this tie, let's say on a 2-hour. Do you think that starts, a cascade effect of participation potentially up to that 44?
I think it would just gravitate there. I think it wants to. Well, when it's setting up like this, that's where it wants to go. Mm-hmm. It's not rocket science, really, when you think about it. Well, it might be. I don't know what they're doing down there. But if it's testing the 20 and it breaks above that level, you've got to look at it from the standpoint that the next serious point of resistance, I'm not saying it's going to go exactly to 43.97, but by golly, it's probably going to get close. And you'd be having your take profits a little bit below there, especially in that consolidation zone. But all the trouble's behind you now. And I think that's what you've got to look at. You look at a lot of the major time frames, the 2-hour, even on the daily, the main moving averages are behind you.
Yep.
When they're behind you, they're providing a level of support away from your stop loss and even your entry point if you're entering at the right place. So it's really important to factor that in when you are placing a trade like this, that that you've got a lot of things behind you, and that's exactly where you want them when you're going long.
And you can't just randomly buy the dip here. You got destroyed buying the dip. This is all about accumulation. I wanted to bring it up because I think it's a perfect case study for accumulation. It's not quite the perfect volume on the break, but it is still good. And someone's buying here. Now, I know Kathy Wood's buying whatever the hell this is. But on top of that, what's really occurring here is that this is the first step of the recovery. And as we start to see, there is usually good participation. This is what the Wolf of Wall Street looked for. This is what a lot of big traders look for. They look for this breach and they take the little snipple, the little snippet bit that they want, which is this tasty treat. So we've got some questions coming in here about US oil. Ty, we'll take a look at that in a second. We've also got Z and Uber and also Platinum. So let's go through quickly here Uber, because Uber is setting up pretty well. Now, you probably haven't looked at this chart too much, I think, recently. I actually don't even like the company, but that everyone knows that I don't like it. It's not about what I like, okay? I don't like a stock we're going to look at in a second. I don't like Zoom, but guess what? Zoom's been pretty good the last couple of days. Yeah. This is a critical resistance. All signs are here. Moving averages are like literally having like a little heart attack in this range. They don't know. They're ready. And everything is pointing to a 51 breach. What are your thoughts on the 51 breach?
Yeah, it has to do it. I mean, I look at that previous support that has been there for, all year, really. Like, it's been massive. Like, you can see that. So it's a very, very serious zone. It's got a lot of stuff coming behind it, which we always like. I'm not a big, I'm not really a big fan of Uber even as a company. I just don't like how they up their prices when there's any excitement, like if there's a footy match or something.
Talk about business practices. You go to see what they're doing on Uber Eats. They destroy poor businesses. But anyway,
it's really poor. I don't like that. I don't like them as a company for that. But that's not what we're talking about. We're keeping our bias away. But it needs to break the zone, and if it breaks the zone, and it looks really, really good. And you're probably thinking, these guys are just repeating themselves. But you know why? But that's what technical analysis is. It's history repeating itself. And key levels get, price goes to it like a magnet when it does break these key levels. But again, do I want to be the first one going along here? No way, because there's a brick wall here. Mm-hmm. No, don't make no mistake. There's a brick wall that needs to be broken before it gets any of my money. And but once it's broken, it's pretty smooth sailing after that, to the next point. So I think it's definitely one to watch, but it's one of those ones where I'd be waiting just a little bit longer. Let it all unfold a little bit longer.
Look, it could become a chart that we put in the room, because I think that a daily close above here is just that big a deal, but it hasn't happened yet. And what you don't want to do, guys, I know a few of you do, don't jump the gun, please. Do not get in early just because, that looks pretty good on the tech. It's not about what it looks like now. It's only good when it shows you the right kind of confirmation. Airbnb, terrible stock, that thing. All right, let's move over to Z here.
Don't get me started on those guys.
Airbnb. They didn't give you a refund on a
not really. Some of the stories I'm seeing on what they're doing, their policy is so bad. And changing the policy secretly on the fly after the pandemic started, just it's terrible.
Here we've got Z, which is Zillow. Look, it still maintains. We've got a big issue here at 120. You can see it's up a little bit. Actually, it's more than 120. 124, I think. Yeah. So 124. That's where the participation will really come in for this stock. And look, someone said they held it yesterday. They were biting their nails about it. Look, it did come and retest the trend line from the top down. This is the type of thing we want. Again, you want to be part of participation. So I can see people taking, little nibbles over here, maybe putting in half their position. Totally see why. And then the next position, it's going to be around the daily close. We want to see, of course, the daily 200 being breached above. If that does occur, then from a technical perspective, you are seeing the real movement of the market to the next level, and 140 and 130 certainly become very open for some hopefully quick movements. We'll move on to Square, Ty. This is another request, and then we'll do Platinum. Look, Square's just doing its thing.
We're going to do the DAX.
Oh, you got to do the DAX. All right, DAX, then Platinum. Two long leg, or two at least, indecision style candles, followed by a bullish movement here. I'm pretty bullish on Square, as you guys know. I actually think the current movement in the crypto market, which we'll take a look at in a minute, is good, specifically Ethereum. Ethereum leading the charge here. We'll take a look at that in a second. And that's a good candle yesterday. Your thoughts, Ty?
Yeah, very positive after those two, indecision-ish sort of candles.
Yeah.
It's interesting. Like I think if it breaks high, like if we get a close above that that previous little mini high, it looks good, doesn't it?
Yeah, 260, 280 become very open. We know 280 is the key resistance here, just underneath. And then, of course, it gets through there. Wow, it could be all, very, very, very aggressive. I mean, we saw that happen with NVIDIA. It broke through and just went ballistic. CrowdStrike, another one. Cloudflare. These stocks have been breaching. And when they're breaching, they're going ballistic, just like Amazon did. So, yeah, it's pretty crazy stuff. Let's have a look at the DAX. We'll use this one. Okay, so DAX. I'll let you take this one, Ty. What are your thoughts here? Tell me which time frame you want.
Let's start off the daily.
Okay.
Let's zoom in a little bit. I think Nick was specifically scalping this one, so we want to go down to a relatively smaller time frame soon. But first, we're going to get the bigger picture, right?
Okay.
It's got. I'm not sure if you watched the Pepperstone webinar that we did earlier, Nick, but it's showing signs of that lower high sequence that on the daily there. Look, we can see we've got a sequence of higher highs and higher lows all the way up. But you can see it's failed to actually maintain that now. You can see you can see a bit of a pattern now starting to form. That it's starting to weaken a little bit. Now, there's no surprises here. I mean, we shouldn't be very surprised that it's at this level. But I think what you're probably going to get, seeing as you're keen on the scalp on these ones, is that you're getting a range. Like if we can definitely draw a channel here on the 4 hour. So you're getting a pretty reasonable sort of scalping opportunity. I'm not sure how short you actually scalp. As in whether you're going to like 15-minute charts or not. But on an indice, I'm a little bit more reluctant to sort of do that. I'm probably more, a 1 hour or 15-minute scalper more than anything else. But you can see you got very clear zones, and movement's big. It's not, it's not a huge range, but it's about, what you got there, about 250 points. It's not bad.
Yeah, as a percentage, it's moving within a 1.54 spread.
Yeah, and if you go to a smaller time, like if you go to a 15-minute chart, you're going to see some pretty reasonable trends forming in that space. This is where, Nick, what we would do is if I was forced to actually scalp this, which I wouldn't, only because I don't look at it enough and I'm probably not trading it at the time I need to be, I would be identifying these channels on the smaller time frames and then heading over to my stochastics and MACD to give me the guidance that I'm after. Those indicators work particularly well in markets just like this, where you're looking for those scalping opportunities in between very key support and resistance zones. When you see that happen, those indicators are worth their weight in gold. Okay, so that's what I would be doing. I'd be breaking it down to the channels that are most relevant to the time frame that you're trading, be that whatever session it is, and then using those indicators to help scalp up and down in between those channels, and that can last quite a long time. I mean, you could get quite a few good trades out of it before it eventually breaks through. But I just my only thing to keep in mind on this, because we know on the daily that we're seeing a series of lower highs on the bigger time frame. Just be mindful that if it does break lower, don't fight it too much. Be very careful. So you can see it. Look at that. Look at the range. It's perfect. But just be really, really careful if it does eventually break down, which it may well do because the daily says it might. Don't be too keen on fighting it. Maybe just look for the next channel down. And then start scalping that channel. Don't think it's automatically going to bounce back, because it doesn't always do that, especially when the bigger time frame starts to move.
And this is a pretty sweet little range that's going on here. I quite like that.
15-minute scalp, yeah, that's perfect. That's perfect, Nick. So you go on 15-minute scalps in those channels. It's absolutely perfect. I mean, it's primed for it, and it has been for quite some time. So if you're looking for the indicators, the Stokes are what you want there. Stochastics and MACD is quite helpful too at the bottom of those channels.
Move over to platinum here, Ty. We're going to have, I think, a kind of cool combo meal deal here, actually, if it breaches. So we've got a trough, we've got a peak, we've got a higher trough, and we've got a long leg doji, which will actually be broken and decision made if we breach to a new peak and create the lightning bolt. So I don't mind that at all. I mean, I think you instantly go into problems, but there should be, let's say we get a little closure above here. I mean, 1150 seems like a incredible, yes, okay, it's going to go there.
If it breaks above those peaks, 1150 is just a formality.
There could be a little day trade there.
It could be, but I think also you could also make a case for the bottom too. Like I could see, I would be waiting. I wouldn't be preempting this trade.
No.
This is not one you want to be
Or
predicting.
you need the close
This could
down
because if it
to
closes
create
lower,
more short.
yeah, absolutely, and then all of a sudden you got a double top in the direction of the overall trend. With a 20 holding up the second trough, all of a sudden it's quite sexy.
Towards the short side. Yeah.
After 9 p.m. in most countries.
Not in America. So if you go and have a look at this one, I think that it clearly shows us that there's two ways to look at this, and there's a long leg doji. So what's that telling us? The market has absolutely no idea what it wants to do yet. FOMC meeting minutes come out, probably going to get a decision made. So yeah.
Don't have a bias on this one. I would say my advice on platinum would be don't have a bias, but have an absolute expectation that you can trade it either way if you get the appropriate break. And they're my favorite trades, Like sometimes they're the ones that you're going to get a trade one way or the other. It's just a case of waiting for the right one. And they're cool.
We've got Algin, ALGN, Align, I think, technology. This is a question coming in here. It's in medical specialities. Let's take a look at the weekly here for you. It's definitely been pushing higher. I guess the way we would probably look at this is we would always go with the concept of, is it doing the right things right now? Yes. Is it making a series of higher lows? Yes. But decision time's coming, and it's coming in the next this is a weekly, by the way, so it's coming very, very soon. You go to the daily, okay? There we are. We're trapped in the zone. It's got to make a decision fast, and yeah, I quite like what it's doing, but I want it through there probably in the next 2 days. Otherwise, if it fails this trend line, you gotta pay attention.
It wouldn't want to go any longer. I think it's getting to the apex now.
Yeah, it's getting to that apex. Yeah,
Put up
exactly.
Or shut up.
We'll do a couple others here, Ty, just for the community. So Ethereum, certainly one that I'm looking at incredibly closely here. Let's go down to the 8-hour series of higher peaks, higher troughs. This thing is coming into, it's the apex predator of crypto right now, 2400, 2390. This is the resistance that we're looking at. We breach this resistance, I believe 2600 becomes open, and it probably makes sense even from the pullback perspective. I wonder if these are the same length, Ty. Let's have a look. Not quite. So, yeah, what do you think of the breach up here? Closure, break, 8 hours, above 2400. Are we going to see 2600?
Yes.
I think so. All the cryptos are really aiming for it. They've pulled back a lot. You look at Bitcoin, you look at everything else. They're all making, yes, okay, this is not exactly making a series of higher peaks and stuff, but Ethereum's doing the right thing. And Bitcoin, although it's the most ugly chart ever and the worst technicals at the moment, it's still trying to get through. And I think Ethereum's going to lead the charge here. So this is the one I'll be looking at and certainly paying attention to. Someone led coin. There was another question. I guess we've got a bit of a time constraint here, so we'll leave it off on coin. So we've got a double bottom that breached. Now, anyone that's do not trade this thing technically from the perspective of, I'm going to go trade coin technically. It doesn't matter what coin wants to do. We know it's the crypto world that ultimately is going to be the thing that demands this. Understand your instrument. If you're trading coin, go look at a Bitcoin chart and an Ethereum chart. If they're going up, coin will go up. That's really it. Like today, it's up 1.85% in the pre-market. Why? Because Ethereum and Bitcoin are recovering. So, yeah, I don't really think of this too much from anything other than if it starts rallying and it rallies to 300, do I think there'll be sellers at 300? Yes.
That's that's trading the coins. It's not really trading. This is so.
No,
you're right.
You've got to trade the coins. Yeah,
100%. Truly, this is for you. As you can see, I don't exaggerate when I say I've got my chocolate milk, Barista Bros.
He's got it ready for the other stream. Milk. You watch. You'll rip it
out. I need chocolate milk. Keep me going, and don't worry. I've got my dressing gown. I've got everything ready to go.
No, you do not. Okay, I know you better than that. I know there's no dressing gown. I knew there was chocolate milk. That's pretty funny. It's very Australian, guys. It must be from South Australia. It should be iced coffee from was it Farmers Union? Isn't that right? Isn't that a South Australian thing? CAD Yen was a request here, Ty. 8 hour. I don't really know what's going on with CAD Yen. I mean, I guess you're looking at shorts. Currency is really tough before the FOMC. It's very, very, very... This is the market I would think that I would wait for the FOMC. You know, the stock market, it'll do its own little weird thing. And, you know, realistically, it's not as susceptible, even though it should be. Currency market, these things wait for this kind of news.
100%.
Yep. And oil stocks... Yep.
Oil stocks.
Well, oil stocks, if you're looking at these again, this is one that we'll probably follow up in the webinar, the live stream over at FX Evolution very soon. I'm sure we'll cover oil tonight, and we'll go into this in some depth and detail. So it's a little bit of a light week on the currency this week, just because we've got the FOMC. We'll be updating you in the private Discord community when we see some stuff. Obviously, gold is one of the ones that's going to be susceptible to this meeting, but it is starting to look good. We went through that in quite some depth. We did some indices. We know where we're at with, of course, the community trend lines and the things that we're looking at. We know also the FANG seems to be leading the markets at this stage, and if that continues with those breakouts that we're seeing, they're probably where the strength is. And you know what happened last year during the exact same time? We saw breadth, which is overall all of the companies that are in the SP500. Only a few were firing, the rest were kind of sitting there or going down. And when breadth does that and we hit those big kind of trend lines, if it does occur, you know something's wrong and we can expect a pullback. Thank you so much for joining us in the webinar. We'll upload this for you guys later. And if you want to, come and join us for the live stream. Both Tyrone and I will be there, won't we, Ty?
Awesome. Yep. Can't wait. No, thank you very, very much for joining us, guys. A bit light on currency only because of the FOMC, but don't worry. We'll make up for it tomorrow in the Q&A. Tomorrow is open season Q&A, which means that everybody can jump in. So, yep. Public and private Discord members, or anybody for that matter, as long as you have the link, can actually get in. So, yeah, jump in and we'll look at what the FOMC did to the currency pairs and see if we can identify anything before the end of the week. So, thank you very much for joining us, and we look forward to seeing you very, very soon.
All right, see you everybody. See you very soon, or see you